Hello everyone. Well, yesterday was a mysterious day that makes me wonder just what is moving investors. The dollar declined against most of the other majors despite some quite positive news. For example, the U.S. trade deficit narrowed more than anyone had forecast because of record exports that will significantly boost the second quarter GDP figures when they're revised. The job openings and labor turnover survey also exceeded expectations, with more job openings than had been thought. That should give the Fed more confidence to taper off quantitative easing. Fed funds expectations edged up a bit as two Fed officials confirmed that view. Even ultra-dove Charles Evans, the president of the Chicago Fed, said that he would clearly not rule out tapering off from September, as many of Fed officials have hinted, and Atlanta Fed President Lockhart corroborated those views. Yet, at the end of the day, the dollar was lower. I have no good explanation. My feeling, though, is that the market can't ignore these dollar-positive indicators indefinitely. They should have been enough, in my view, to reverse Friday's change of heart on tapering off of quantitative easing and to reverse the loss on the dollar following the non-farm payrolls figure. It hasn't happened yet, but I still expect that it will sooner or later. Now, today's major event will be the unveiling of the Bank of England's new approach to monetary policy, assessing the use of thresholds and forward guidance. A poll by Market News International showed most analysts expect the Monetary Policy Committee to announce that they will keep rates low until certain thresholds are met, such as unemployment currently at 7.8%, falling to 6.5% or 7%. There may also be a time threshold, such as a promise to keep rates low until, say, mid-2015. An inflation constraint, making the other thresholds contingent on inflation remaining close to the Bank of England's 2% target, is another possibility. Now, from my point of view, I'd expect euro sterling to rise on the news. The pair has fallen pretty steadily since last week, when the Bank of England said even less than the ECB did after their policy meetings. Now, it's the turn of the Bank of England to take the spotlight. However, from a technical point of view, the pound looks fairly well underpinned in the near term, at least against the dollar. Cable remains above the 200-period moving average on our 4-hour period chart. Since the stochastic oscillator is entering the oversold area, we expect the price to move higher as soon as the momentum indicator breaks above it. The break of resistance at 154.32 will positively confirm the continuation of the uptrend following the recent correction to the 50% retracement. On the longer term, on the daily chart, it's moving sideways in a trading range between 155.97 and 148.11 boundaries. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.